This is what sets the stage for the next bull market, right? Supply gets so constrained, gets so tight that all of a sudden, a small amount of capital flows in, and Bitcoin can do nothing but just go up. And you can kind of see that, that long-term holder supply draws down into these parabolic bull markets. What's that saying? Well, you stack for 3 years Bitcoin 5x's, you take a little bit off the top. That makes sense, right? The ETFs, right? Some people have different opinions on them. They're coming. They're definitely coming, right? Larry Fink, all of them. BlackRock, iShares, Vanguard, they're coming. The investment banks, there will be Bitcoin ETF.
Prominent Bitcoin and on-chain expert Dylan Leclair recently shared his prediction for BTC and the massive rally coming in the months ahead. In his keynote speech, Leclair highlights a critical perspective: the government's 4-year inflection of monetary stimulus and subsequent tightening, which also happens to align with Bitcoin's 4-year halving cycle. He discusses BlackRock's massive purchasing power in BTC and why we can expect a panic-level rally in 2024. According to Leclair, the conventional view of the Bitcoin halving as a catalyst for the movement in price is overshadowed by the real drivers of value and adoption: the government's debt cycle and continuous money printing. In his analysis, Leclair underscores the significance of understanding this stimulus cycle as the true force behind Bitcoin's bull runs. Adding urgency to his message, Leclair advises viewers to seize the opportunity to acquire Bitcoin before major institutional players, such as BlackRock, make their move. He predicts a looming Bitcoin supply shock, making a compelling case for its occurrence as these significant players strategically position themselves in the BTC market. Let's get right into the video. Don't forget, our partners over at Jamie Tree Finance have launched a daily 5-minute crypto newsletter. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part, it's absolutely free. Click the first link in the description and enter your email to join over 5,000 others in becoming a better crypto investor right now.
The narrative of, BlackRock's ETFs are coming, the suits are coming, kind of was said last cycle, but I think this time is going to be kind of another order of magnitude larger whenever that time frame comes. And the good, the bad, and the inevitability of it all. Is it a bad thing that Larry Fink and the boys from Wall Street are going to come into Bitcoin? Well, we don't really have a say. Bitcoin's permissionless, but I guess how do we think of that all? All right, so this first chart's pretty obvious. Just drawdown for Bitcoin all-time high. Bitcoin notoriously volatile, right? That's kind of one of the main talking points of skeptics, is how volatile it is, right? Okay. Here's Bitcoin's price, realized price. What is realized price? You can also think of it as like market cap and market realized cap. It's essentially like the realized market cap of Bitcoin would just be all of the supply at the price it last moved, whereas a market cap is just the circulating supply multiplied by the price it last moved. So realized price is just the average cost basis of all Bitcoin. It's the price at which every UTXO last moved, valued at that price instead of just the current exchange rate, right? And so what you notice is it's a lot less volatile, and it's kind of just going up in this lockstep fashion. So here we have those two same data points, and MVRV score, what the heck is that? Market value to realized value is just a ratio of the two, standardized. It's a z-score kind of layered on top of that. And you can kind of see a really distinct boom and bust cycle, right? We can all intuitively feel Bitcoin's boom and bust cycle. You can, whenever you open up a linear chart of Bitcoin, it's either a massive bubble or it's dead. And there's basically no in between. Well, this is kind of contextualizing what's happening here, right? The interplay between that average investor cost basis that really doesn't draw down all that much and kind of moves up in exponential fashion in a bull market versus, the hyper volatile day-to-day exchange rate of Bitcoin. Okay. So here is the 1-year realized volatility of Bitcoin. It's annualized volatility, 1-year basis, and the realized price annualized volatility. How much it's fluctuating is a lot lower than Bitcoin, right? So Bitcoin is hyper volatile, that's a big narrative. Bitcoin's 80% down from all-time highs at 15,000, after FTX collapse, down from the high of 69,000. But like those metrics, those kind of, eye-grabbing mainstream media stats aren't really indicative of reality, right? Like not everybody, barely any Bitcoin moved at 69,000, right? It's just like, it wicked up there, it wicked down. There wasn't really that much like capitalization at that point, right? And so we can kind of see with this average cost basis what's actually happening. Bitcoin's not that volatile, on average for all the users in the network, that cost basis. It's just the mark-to-market exchange rate. So here's these same stats, but the drawdown from all-time highs, right? Bitcoin, again, the narrative is like, it's so volatile, no one can ever touch it. It's a misrepresentation of what's actually happening underneath the surface. So the exchange rate, boom and bust, minus 70%, minus 80%, keeps on happening. The realized price, that average price, that drawdown from its all-time high, it basically only ever goes below 20% maybe. So that kind of like, you can think of the realized cap metric, that realized price, average price of all Bitcoins are like, it's not a perfect measure, but like every Bitcoin valued at the price at last move is a pretty good measure of like, the vitality of the network, right? It's far better than actually just multiplying the circulating supply by the price, which is how a traditional like equity market cap would be calculated, right? So with Bitcoin, we have a really transparent UTXO set, transparent supply, so we can do some cool things with it. So here is the realized cap, the 90-day percentage change, right? And without the exchange rate layered on top of it, just the realized price, right? And so again, far less volatile than the daily exchange rate, and it's showing that 90-day percentage change. And what you can notice, right, is really diminishing returns here, right? And so, it makes sense. It's a lot easier to pump Bitcoin at $1 than it is $10,000 or $100,000 if we get there one day. But this is just kind of showing that. And now I'm going to show the absolute change in realized cap.
Leclair says this will be central to Bitcoin's long-term price increase. And while he acknowledges that Bitcoin's journey will be volatile, its success is a certainty. He predicts Bitcoin will hit $100,000, and because of the ETF and institutional adoption, it makes a clear path to 10 million per coin. Governments have attempted to slow down Bitcoin's progress by making it more difficult to enter and exit crypto markets. But despite these challenges, Leclair believes this actually demonstrates Bitcoin's lasting presence and solidifies its position as the currency of the future.
So what to know? The realized cap percentage change is obviously diminishing, right? But the absolute change is not. It's actually getting a lot larger, which obviously makes sense, right? More capital is coming into this asset with every cycle, with new adoption waves, with better tech, right? The Lindy effect, we know these things, right? You can sense this, but this is just kind of putting a visual on what's happening. And so we're going to change pace a little bit, and we're going to kind of move to what drives these cycles. But here is long-term, short-term holder supply. This is just long-term holder supply, right? So as a percentage circulating supply, Bitcoin that's basically haven't moved in 6 months, UTXOs that haven't moved in 6 months, less short-term holders, less exchanges, right? And so we're basically at like 80%, this all-time high. You can kind of see, you can kind of feel, right, the interplay of like hodlers and the cycle, right? Stack sats, never sell. All of a sudden, there's just not enough Bitcoin to go around. Some capital comes in, and Bitcoin's price goes parabolic. And to the mainstream, media, or to the legacy financial analysts, it's this random thing that comes out of nowhere, and no one can expect it, right? But really, right, like hodlers set the floor. That's actually happening, and that doesn't stop, minus 20% daily candles. Doesn't stop, some like massive liquidations or wipeouts. But this is what sets the stage for the next bull market, right? Supply gets so constrained, gets so tight that all of a sudden, a small amount of capital flows in, and Bitcoin can do nothing but just go up. And you can kind of see that, that long-term holder supply draws down into these parabolic bull markets. What's that saying? Well, you stack for 3 years Bitcoin 5x's, you take a little bit off the top. That makes sense, right? Okay, so, one of the popular narratives and what I was trying to show with this previous chart of kind of that holder supply becoming more constrained and then drawing down as Bitcoin goes parabolic is, often like the halving is attributed to like Bitcoin's price runs. It's like, oh, well, halving happened, number go up. And, admittedly, like stock to flow is very great for showing that kind of like absolute scarcity. It was, one of the things for me in high school, I saw the stock to flow ratio and was like, well, great, the difficulty adjustment, what is all this stuff? And it kind of sent me down a rabbit hole. I won't lie, it's good content, but it's not really, we have so many other things to look at as to what's actually driving this, and the halving is a really, pretty, oversimplification of what's happening. So here's global M2. It's taking a bunch of different, the M2 money supply of a bunch of different nations, putting it in dollar terms, so not the local currency, it's normalizing in dollar terms, and then the middle pane is the year-over-year percentage change, right? And you can kind of see when there's a massive expansion of the monetary supply, and admittedly, like M2 isn't the perfect measure of money supply. It takes into account bank reserves and all this, financial jargon, whatever. We're not going to get into that. But really, like the rate of change is what is important here. That's what's, kind of what you should take away. And look at that rate of change of the money supply, the global money supply in dollar terms, and the Bitcoin price, right? There's something there. Coincidence or not, who knows? But there's obviously something happening there with that chart, right? Bitcoin's, just recently became this macro asset, but it's kind of always been one, right? Even though there wasn't, the big TradFi funds and Larry Fink talking about it, and 5 years ago they were saying it's a money laundering index, and now they're saying, oh, Bitcoin's a global asset. Well, Bitcoin's always been a macro asset, right? It's always kind of gone with the tide of this. Here's another kind of comparison, right? Major central bank balance sheets, Bitcoin's market cap percent. Okay, and obviously major central bank balance sheets have gone up and will continue to go up because there's going to be a whole bunch of debt issuance. All right, so Bitcoin leverage, right? It's been a native crypto game for a while. Crypto collateralized open interest, right? BitMEX, right? There's no fiat rails, no stable coins. You send in Bitcoin, you get Bitcoin leverage, right? This is just derivative casinos, right? This isn't the leverage we want or the leverage that's going to come, right? Here's another example. WBTC, I get it, Ethereum trust model, it's a wrap token, whatever. But people are using Bitcoin as collateral, right? Here was an example of the recent cycle, Grayscale, right? Grayscale ETF. It was a closed-end trust, so there was a premium to discount to NAV. It ended up wrecking a bunch of people. But again, 600,000 Bitcoin, it's collateral. A bunch of people, a bunch of hedge funds, a bunch of neobanks use it as collateral, right? They end up all getting wrecked, of course. But what am I getting at here? Okay, so who knows the timeline? The ETFs, right? Some people have different opinions on them. They're coming. They're definitely coming, right? Larry Fink, all them. BlackRock, iShares, Vanguard, they're coming. The investment banks, there will be Bitcoin ETF.
Leclair predicts that 2024 will be the year we see Bitcoin explode and represents far more than just a means of escaping the continuous devaluation of the US dollar. He sees it as the bedrock of the entire digital asset ecosystem, a rock-solid foundation upon which everything in the crypto world has been built upon. Leclair says the ongoing impact Bitcoin has on the crypto market is not merely a reflection of mainstream adoption. Instead, it's cryptocurrency investors acknowledging the place of the leading crypto asset in the market. He believes that the greater rally for mainstream investors is coming, and that time is now. What do you think about Dylan Leclair's prediction for Bitcoin and where crypto is headed going into the halving of 2024? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.